crazy Thursday today, but welcome to another segment of Market Overdrive. It's rainy here in Chicago. We're downtown, and traffic was terrible. Seriously, no parking. I don't appreciate it. My VIP parking was gone, so therefore it's not VIP, right? Enough about me. How are you, Nick?
I was trying to think of the perfect acronym for VIP for you, and I just couldn't come up with them that quick, so I just let it go. It is not only raining, it's actually snowing, and it went from like 45 degrees to like 28 within like 15 seconds. So here we are.
And
welcome to Chicago.
Brought to you
welcome
by
to Market Overdrive, and let's just get on to the important stuff, and that is helping understand the VA stuff.
What are we talking about today,
VA
Nick?
eligibility is the ultimate thing that you need to know. If you're in our industry as a mortgage professional, it's key. It's a great product.
Speaking of mortgage professionals, let's introduce the real lender in the show.
No.
Hey guys, how are you?
Hey.
I'm the one that's actually going to take the lead here on this
Ooh, let's sit
VA
back, Nick.
lending.
You and I can just like go
I'm
back.
gonna sit back and relax.
Nick's gonna be the filler today.
All right,
Filler.
let's do it. I'll be the filler.
All right, it's your show. You and Trevor take it over. Hi, Trevor. How are
Hi,
you?
I'm doing well. How are
Who's
you?
going to introduce Trevor?
I'll introduce Trevor. Today we have Trevor Orsinger of Orsinger Law, a small boutique real estate firm here. Trevor is visiting us here today in studio, and we're going to talk about how we're able to help out veterans through the loan process. Obviously, Trevor is a serving Air Force veteran.
Yes, that's right. I am a lieutenant colonel in the Wisconsin
Lieutenant
Air
Colonel.
National Guard.
Goose.
Do you wear a
Yeah.
suit?
Can we call him Maverick or Goose?
No, easy.
The
You know that's
official.
my movie.
That's not you.
I'm more Iceman.
Like,
I think.
seriously.
There you
That's
go.
ice.
There you go.
Okay.
We needed a nickname, Trevor. We're just gonna pass it to Iceman from here on out.
All right. Ice
Wait,
take
why
the
didn't
shot.
you wear your uniform? You're not allowed to wear a uniform outside?
No, it's under the suit.
Oh, okay.
So,
Wow,
yeah.
it's under the suit, you guys.
Okay.
All right, the original ModSquad can leave now. It's a Trevor and Karla interview. Let's
Right.
do this.
So tell us a little bit about your background and how you got into the real estate side.
Yeah, so I graduated from John Marshall Law School in 2003 and ended up joining the active duty Air Force in 2005, where I was active from about 06 until for almost about 4 years. And after I got out, I had a couple of jobs in a couple different cities throughout Illinois and eventually opened up my own practice just recently. So one of the things that I find most enjoyable about what I'm able to do is to offer some veterans assistance in a variety of legal topics, to include veteran loans. I think, as we were talking about earlier, sometimes the process can be a little bit overwhelming and a little bit difficult. And so one of the things that I most enjoy doing is being able to simplify that process on behalf of my clients.
So no need to ask you why specifically veterans, because in our industry, when somebody focuses on veterans, you always ask why. Now everyone has different reasons, but the most common one is the connection. Obviously, you being in the Air Force, it was something that felt right and is why you took that
Yes,
path.
absolutely. Okay. I think there's no greater calling to this country than serving in some capacity, and it doesn't necessarily need to be in the military. For me, that was.
I think I agree. We all agree.
Yeah,
Correct.
and so to be able to offer help to those who may not know as much, for example, is truly, I think, another form of service that I just truly absolutely enjoy.
Yeah, and I've said this over and over again. I think everybody can collectively agree it's never enough when it comes to supporting the veterans and the stuff that they have to go through, post-traumatic stress and the injuries and amputations and just all the medical attention they need post-service is one thing, and it's never going to be enough. I don't really think we're ever going to accomplish enough. I think we're always going to try and get better, but we're always going to need to do more because things get more intense as time goes on as well.
Yeah.
And but if there's one thing I truly feel that they hit it on the head, it's this program for mortgages. Because if you look at it from a landscape, there is nothing in the industry like the VA loan. And I'll let you guys get into that. I'm just going to play the color role here. But it's the only thing I've ever said, we did that one thing right when it comes to veterans because we have given them so many things, not that we, but the industry has provided so many resources for them to take advantage of that I think a lot of veterans have no clue at how easy I should say it is to get a loan, and protected, by the way, not just like you just sign your name and take out $500,000 you can't afford, but it's so forgiving and it gives a lot of leeway that the non-vet can't achieve.
Yeah, and I think as we continue this discussion, there's a couple of programs that I think are really important. You talked about how the government can help service-disabled veterans, as well as some property tax exemptions that exist within the state as well. I look forward to it.
Well, having said that, for our YouTube friends, thank you so much for following us and hanging out with us every Thursday. I do want to go through the rundown so that you can follow us on YouTube and kind of fast forward or reverse according to the information that most interests you. So today's topic is obviously VA, but we have some really cool subtopics that I think you'll really enjoy and find useful. Military culture, benefits to veterans, service disabled veterans, tax savings, first-time buyer incentives, and I believe it's SECRA. You said?
Yes.
SECRA. And then, of course, our very own Graco Funes is going to give us a rundown of the benefits of the loan programs. And, of course, I will review the purchasing aspect of the timeline with respects to buying for using a VA loan. So do we want to go and do the do you have a nitro question?
Absolutely.
You do.
We can't do a show without a nitro question.
We cannot?
There is no show without the nitro question. And today's nitro question is sponsored to you by Stewart Title. Thanks to our friends. They pay the bills over at Stewart Titles. And we're going to ask you, we always ask our guests a question. Sometimes it's related to the topic, sometimes it's not. Now, be it that your background, I have to ask you an Air Force question. You're not going to answer it right away. We want to hear the answer in about 15, 20 minutes. We'll come back to it. You can
Wait, can I
mull
just
it
say
over a
something
little
about
bit.
the nitro question? The cool part about this question and why it's so hilarious is because we sit here and watch Nick make a complete fool out of himself because we never know what he's gonna ask. Like he literally
I don't know what I'm
comes
gonna ask
up
till the
with these
moment.
stupid
Nervous.
questions.
I kind of
I'm
figured out.
nervous.
You're going to answer this easily.
All
We're
right.
just all curious. We want to know
We do.
one of the most craziest, shocking,
Come on, make it good.
inspiring stories you've had to deal with in the service in the Air Force.
Oh, inspired. I like that. Okay.
Or just
that could
crazy and
be-
shocking.
Okay.
We'll just take. If it's funny, it's even better. But if
Okay.
it's not, if it's just insane, we want to hear it. I mean, who doesn't want to hear something like that?
I want to
It's
hear
not.
it.
It's not often you get a vet
But it's
from
gotta
the Air
be-
Force, and it doesn't have to be related to real estate. This is just a nitro question.
Okay.
This is about you, and sometimes it is related to the topic, sometimes it's not. But we're gonna come back, let that marinate. We're gonna come back to that later.
Like you said, you're in the field, right? So we want to get to know you. Obviously, we want to introduce you to our audience and our friends that watch us all the time. So we want to know about you, your personality. So tell us one of your best stories. See what you've got. But so now moving on with our show, why don't we start with the actual aspect of why people should be listening today, Graco? Give us a rundown with respects to the benefits of a VA loan.
So like Nick said, it's an amazing program simply because you're not putting any money down. Okay, the VA loan is insured by VA. You reap all the benefits to any other grant programs that are tied, whether it be a county grant or a state grant program. Trevor also mentioned that some of the state local tax codes also give you a reduction on your property tax bill. I know I had a client last year that actually was totally exempt from their Cook County tax bill. Zero because he was a disabled vet. So
Nice.
keep in mind, we did have to close on the loan and we did have to qualify him based on the current tax bill. But after he filed his exemption, the new tax bill would adjust and his mortgage payment would be reduced because that tax bill would be at zero. But the first thing you want to do when you apply for a VA loan is verify your certificate of eligibility. That's
Number
the
one.
first thing you want to do. Certificate of eligibility is going to tell us exactly what you're qualified for as far as the help me out here, Trevor. My mind just went blank in reference to we were talking about this off air, your entitlement. Okay, so that certificate eligibility typically starts at around $36,000. And what that means, that's the amount that VA is going to cover if, God forbid, you just can't pay that loan at some point. That's number one. Number two is you want to make sure that the lender that you're going to is VA approved. It's very important that you work with a lender that specializes in VA. It's going to make your process a lot smoother and finding a property when executing that contract. Number three, if you need help obtaining your certificate of eligibility, you want to apply online at the VA e-benefits portal. It's a very simple process, or even us as a lender can help you walk you through that process. And then the last way of obtaining your certificate of eligibility, if you don't want to go through the online process or you want to go the old-fashioned way, you can just mail in your form, which is their 26-1880 form. And that process takes about 6 to 8 weeks to come back. So we highly recommend that you do that online or come into the office and we can walk you through that process of obtaining that certificate. Once you've acquired all of that, The process is very simple. Typically, 30 to 45 days is what I've experienced from the time that I've pre-approved the borrower, or I'm sorry, take that back, from the time that a contract has come in with a borrower to closing. So Trevor and I talked about this off air. For me and my little group, the process of VA is no different in processing and underwriting. Yeah, there are a little bit more documents that we have to gather and verify, but it's really no different than my conventional loan or my FHA government loan. So I highly recommend that you take advantage of it. Again, it's 0% down. There is no mortgage insurance. I did leave that out a second ago.
How do you leave that out?
Yeah, I'm sorry.
How do you leave that out?
Yeah, and I think that it's very important before we get into Trevor and the military culture. I think it's imperative that our listeners do understand the concept of what it means for no money down, right? So if you're looking at a $200,000 example, that's $7,000 for a FHA loan program that you would have to save, and it takes people a long time to save $7,000. And if you're going to go the conventional route, you're talking about 5% down loan program. That's $10,000 down that you have to save up. If you have a VA certificate and you qualify for a VA loan, you don't have to come up with this money. And so you're saving money by not having to come out of pocket. And then more importantly, on a carrying cost basis, on a monthly basis, you don't have to pay PMI. So in some cases, what did you say? That was like $158 or something, or
About
$180?
$180.
On a $200,000 loan program. So you're saving $180 on a monthly basis. And then there's also the whole forgiving of excuse me, of like bad, not necessarily bad credit, but it's very lenient,
a little looser.
right?
It's a little looser.
So you have what the minimum is like 620 for a
620
VA?
minimum credit score.
So I mean that's unbelievable,
is
right?
it 620 right now? I haven't done a VA personally. I haven't done a VA loan in a
620.
while. I thought it was lower than that.
So I'm showing here.
I know there's a
I think it's
580, but
yeah.
typically you want to be right around the 620 mark.
So obviously, if you've hit some hard times and you even have some like defaults with respects to foreclosures, short sales, or even judgments like bankruptcies, it's very forgiving to that. And also, I mean, 620, and you still get very competitive rates. So I think it's a great overall program. That you said it's like it's like business as usual for you because you process these all the time.
It's the same process.
But you're getting more benefits, and I think everybody should take advantage of this. And I believe there is an assumption too as well that if somebody were not able to carry it on, you can assume give it to someone else, and someone else can assume the responsibility. So great flexibilities. So that's why it's important. We wanted to bring you in here, Trevor, so you can tell us a little bit about this culture and why are actually people not taking advantage of this.
Yeah, so I think, first off, I want to thank all of you guys for taking the time to explore this issue. It is really, really important for, I think, veterans to at least understand that this program exists and is out there. When we talk about the military culture, I think you generally have a bureaucracy, and I mean that in the best sense of the word, being able to instill a level of training and responsibility in young troops and young airmen and young Marines from a very, very early age. And so I think what you could do within this industry is leverage that to a positive effect. And so what we talk about this culture, it's, hey, I need you to do A, B, C, D, and E. And they will generally get that done pretty quickly. And so when you have that understanding of how the military mindset works and how the bureaucracy trains them to accomplish a certain task, I think that ends up being for everyone's benefit. The two biggest things I think that from a service member's perspective are getting that certificate of eligibility and finding a copy of their DD-214, which is the second thing that the veteran needs in order to at least begin, I think, the underwriting process or begin the loan approval process. So a lot of people don't know where to go get that certificate of eligibility. Every service member should have access to ebenefits.va.gov. And on that site, they can pull up a letter that says you are now eligible for a VA loan. And so they should be able to provide that to a lender within minutes.
Repeat that one more time.
It's ebenefits.va.gov.
Cool.
And then the second thing is the DD-214. And that's just basically a document that describes that they were in the service and that they are truly eligible for the loan.
So now let's go into, because you'd be surprised, this has happened to me more than once. I thought it was a one-off thing the first time it happened, but it happened more than once. There's still human beings at the end of the day that are working in the administration departments of the VA. They make mistakes. I had a client that served 4 years, National Guard. She got pregnant. She was discharged. She was just discharged.
Sure.
And she, got her ducks in a row. She's ready to buy a house. She comes in. She's, wants to do a VA loan. And it said dishonorable discharge. So now it's clearly a mistake. She's like, wait, what? And she was completely blindsided, Now, what I learned from her is to go and repetition that or to go?
Correct.
You're going to be able to explain this better.
Yeah.
It
That's a
take
great
up to 12 months.
That's a great
'Cause this
question.
happened to me twice now, and I thought that was really strange.
Yeah, like you mentioned, it's
It's a one-off thing.
Organization that's run by human beings.
They're human
and
beings.
They're
Sure.
going to make mistakes. So there's a process in place that accounts for that, and it's called the Board of Corrections for Military Records, the BCMR process. And each service component has their own BCM process. I talked to a gentleman earlier this week who was looking to get that done. So it's something that's another thing that I do in my practice is being able to help those veterans who need to make a correction on their record. From a timing perspective, it's like any bureaucracy, it's going to take some time.
They told her 6 to 12 months, and we had to do a totally different loan program. It was a nightmare, but she wasn't prepared to do another loan program.
Right.
It's a big haul from 0% to 5 or 10% down.
Enormous.
On a $400,000 purchase.
And at that point, it may help to have somebody who focuses their practice law in this area to see if they can pull the levers maybe a little bit more effectively. And
so, could you have done something to escalate that
absolutely.
process a little bit?
Absolutely.
Not
that I'm able to grease the wheel, so to speak.
No,
but
I know, but you know how to navigate the system a little bit.
Yeah, exactly.
You should have done this show in November. You would have saved us a lot of time and her a lot of money. I mean, to go from a $450,000 purchase, planning to do zero, to end up having to put down $25,000. It's a big swing for a single mom.
Yeah.
Big swing. So one thing we forgot to mention about the VA loan program, aside from the fact that there's no money down, they get to go up a little bit higher in loan amounts.
Right. So what are
And
the
still
loan
keep-
limits?
It varies by county, but they can actually take advantage of the program and go above and beyond the traditional conventional loan amounts and still keep the zero money down. Now, there is a max at some point where I'd have to relook at those numbers because it's early 18. Those numbers sometimes readjust in the beginning of the year, so I don't want to get caught saying something that I'm off by a little bit. But as you go up higher and higher and higher, then they'll require small down payments. Like you could do like $1 million loan with 3% down or 5% down, which is not possible.
So you can stay within the parameters of the zero down loan limits, but you can always go above, and I believe 25% if you go above for down payment.
I remember one time looking at a scenario. We did a show on vets, which was one of our most popular show back 3 years ago. I think Charles Daly was here.
A different platform.
At a different platform, and we took a 660 or 680 credit score vet and did $1 million purchase, and it was like compared to a conventional purchase. First of all, the 660 wouldn't have been approved, or 680, like not even on the radar to get approved, unless it was like an astronomical down payment of 40% on this jumbo purchase. And in the case with the vet, it was like 5% down, no MI. If you were a non-vet, you were gonna have to put down like 30% to get approved on a 680 at that time 3 years ago. So look at the difference there. 30% down payment on $1 million, and if you're a vet, 5%.
That's amazing.
And there's no MI for the vet.
And it's well worth it, right? I mean, you need to
It's
provide
just,
housing for people who are serving for us. And then also looking into the dynamics of the financials when it comes to these programs, is it true, well, you do have limitations on what closing costs and fees that they can be assessed against these programs, correct? So there's a limitation?
Yeah.
Go ahead.
Rocco, do you want to speak to that, or Trevor?
Doesn't matter.
I don't know if there's a limitation, but I know there's, we talked about this earlier, where you're allowed up to 4%. Trevor actually corrected me on that because I thought it was a little bit higher, but you're allowed 4% in seller concessions when it comes to that.
Right, so 4% seller concessions, right, and they can also
Which goes
use
to
it.
pure closing costs, though.
Closing costs, but also because they're so lenient on forgiving of past debt of judgments, we did agree that they can also go towards judgments. If somebody has like a past due judgment that's affecting the loan process, it can get cleared off with that included in that 4%. But what I mean as far as like closing costs, there's limitations on what kind of lender fees you can charge because it is a VA program, correct?
Well, for us, all of our lender fees are waived on veterans. I mean, that's the least we can do. So keep in mind that if you are taking on a VA loan with us, we want to make sure that the cost to finalize your transaction is the least amount of money out of pocket. Think of it like this. You're already getting the loan at 0% down. And then on top of that, if the seller is willing to give you a seller concession, in actuality, you're coming to the closing table with, a driver's license or a verification of ID to finalize your transaction. You're not having to put anything down. Now, to touch on loan limits, there are what we call high-cost loan states where you're allowed a higher loan limit depending on what state. Like California is one of those states. New York is one of those states. There's a couple other states. Hawaii is one of those states where you're allowed to exceed the normal traditional conventional loan limits. So keep that in mind that, as Nick touched on, there are ways to obtain a higher loan amount and get past these traditional conventional loan limits.
I don't, and when you get into closing costs and, in today's world, closing costs and rates are very parallel. You don't have it like in the old days where a loan officer can decide to make whatever they want in whatever situation. All our loans, all our margins are priced in advance, and we have to stick to our guns. And so most lenders are priced very aggressively in order to stay competitive in today's world. It's not like a one-off case, oh, this person's going to let me make more money than this person and all that stuff. That's been long dead for quite a while now. What that means is that if you're a lender that decides you're making 2.5% on every single loan, it's 2.5% on every loan, whether you're a vet or you're a conventional, 50% down payment buyer. It doesn't make a difference. Whether you have an 800 credit score or a 580 credit score, it's still 2.5%, correct? So my point to this is, and where I'm going with this is that the VA rates are by far and above the best rates in the marketplace.
So it's still competitive.
So if I say, for example, and I don't have a rate sheet in front of me, but let me give you a scenario. It's not uncommon to see a situation where if the going market 30-year fix on a conventional loan is 4.5%, okay, and that is 2.5% to the lender that you're going to, and that's the margin they have decided to make on every loan moving forward across the board. You shouldn't be shocked that a VA interest rate is not 4.5%. It's like 4.125. That makes sense? Because it's substantially lower across the board. So when you get to closing costs and how they correlate, I just don't really see how closing costs become very problematic. Now, unless the vet wants to really buy the loan down to a rate that's well below the market, and he's like, you know what, I don't want you guys to make anything from the interest rate.
I think
want
Karla
you
meant
to give me
closing
something well
costs
below
like
market.
title, attorney fees.
Yeah, third-party fees, sure, but like from
third-party
lender
stuff like
costs,
that.
it
Right,
shouldn't
but
be very much on a VA loan.
Let's also not confuse our listeners, right? Because we're talking about three things now. You're talking about interest rates tied down to the program. You're also talking about closing costs and then allowance, seller credit allowances. What I'm saying is, in the recent example, Graco, right? Like we had a washer and dryer. In lieu of installing a washer and dryer into this new purchase, we were going to get $1,000 credit. So we were concerned that it was going to exceed the allowable amount of closing cost credits that a seller can issue. At this point, we're just clarifying that if you stay within those 4%, they're not going to question whether you get something in lieu of something else. Does that make sense? And also, in addition to that, you can also pay off bad debt. Like, you couldn't do that on a regular loan program. I mean,
remember
so I'm
that,
buying
though.
a house and also about that credit card I forgot about like 3 years ago. It gets cleared. I mean, your credit gets clear. It's a win-win, right?
That's to the underwriter's discretion, though. Keep that in
Okay.
mind,
All right. So
Yeah.
I'm getting too excited. Let's buy a house and clear credit.
if there's a one, life happens, and again,
I'm not.
vets are going to get a lot more leeway with this than the average Joe. But even if a vet himself, who usually gets approved on almost every VA loan, if there's a pattern of consistency where everything is always late, an underwriter will scale back at some point and say, hey, we want to help, but if we think this loan's going to default, it's going to default. So there's also another little thing that people don't know about is there's a protection, a safety valve that is not used for a non-veteran, and that's the cash flowing DTI. It's not just the debt to income
you're
ratio.
getting way too.
This is very important.
Like,
because
seriously, very technical. Are you gonna like really?
There's a lot of arguments. A lot of nerds out there argue that this should be done on everybody because whether you're a vet or just a regular citizen,
You're geeking
you
out.
should be underwritten to a responsibility level where you have enough cash flow to sustain your lifestyle outside of just your mortgage payment. Because obviously, when one starts to go bad, the other one might start to go bad as well. In this case, with vets, they put a precautionary measure in there to make sure that they are still cash flowing enough to. We have bills outside of the mortgage application that we don't see, cable and gas and electric, and those things aren't typically in your normal mortgage application. Only on VAs do they have the secondary debt to income ratio, and that's why the VA loan is actually one of the best performing loans in the marketplace.
I'm gonna like you on days where you forget you have a show that starts at 5:30 because you come in here, you geek out, you don't act like a total goof, and you get down to information.
The bad news is I'm late. The good news is I'm good.
But I think you hit on a really important point with the secondary income or the secondary process, for lack of a better word, and that I think may trip up some vets when they say, why is this taking so much longer than a normal loan or a conventional loan? And they dig a lot deeper, and for good reason, by the way. The government's going to essentially back that loan and guarantee that loan. And so I think that it's worth it. If you can kind of be patient and go through the inspection, which is also probably another difficult encounter for a lot of veterans, it's worth it.
Well,
But to protect them, though, it's not an inconvenience
Exactly.
to the veteran or the borrower. It's an inconvenience to the seller, and I think that's where the mentality changes.
You have to look at it from a servicing perspective for those that are servicing the loan. First of all, no servicer, no lender wants to foreclose on anybody's house. It's the worst case scenario, right? Now, what I learned post-crash when we all had to get really smart with short sales, foreclosures offense, and loan modifications, the whole 9 yards, there's no worse situation for a judge to sit there and make a determination on a vet's foreclosure.
Yeah.
So lenders are, as much as they're very forgiving on credit scores and late payments here and there, and maybe even a little flexible with depositories, and they're very forgiving with that stuff. They do keep this portion of the loan in check because, the last thing they want to do is see a vet get an opportunity and fail on an opportunity. It's just ugly for everybody.
Let's get into these benefits, though. I really want to know more about that first-time buyer benefit that you were talking about, Trevor.
Yeah, so there's a couple major benefits that are available to veterans. The first and foremost is that if you are representing a client or dealing with a veteran, you want to ask them if they have a service-disabled rating from the Department of Veterans Affairs. And generally what that means is that's another program I think the VA got right. I think it came under a little bit of heat within the last few years because so many claims were piling up in D.C. and vets weren't able to access the care and the gratuities that they were ultimately entitled to. And so what the VA process looks like is that if you come back out of the service or exit the active duty and you have an injury or you had a pre-existing injury that was aggravated while you were in service, you're entitled to compensation from the Department of Veterans Affairs. And the VA will make a rating based on the injuries that you sustained. So it could be anywhere from, hey, you're 10% disabled to 20% disabled to 100% disabled. So the higher the disability rating, the more services and more benefits that are available to you. And one of the biggest ones is the Disabled Veteran Standard Homestead Exemption in Illinois. And if you are 70% or more disabled, you do not have to pay taxes on the assessed value of a home up to $235,000, which is another enormous benefit to veterans. And so that cuts your payment down by another $300 or $400 a month, give or take, right?
Man, it's good.
Yeah, I can give you the recruiting number.
But
I can give you the number.
I think it should
You can
go
join.
higher. I mean, like if he's disabled, 100% disabled, why is he paying any tax if he's got a $300,000 home?
And that's the
Are
no,
you
the
really
assessed value.
doing this
I'm just
challenging?
I'm just
So
saying they just give him more.
So in general, the assessed value is, I think the sale value is generally about 3 times more than the assessed value, give or take. So it's, he's got.
Oh, you said
up to
assessed value. I'm
yes,
sorry, I missed
yeah.
that. So he can go up to a $600,000 home.
Absolutely.
All right, now we're good. He's living in a $600,000 house. Yeah, that's
and he's
cool.
not paying taxes.
That's totally
Really?
Well, he said 240. I'm thinking 240,000, and even in like these surrounding suburbs, doesn't get you
Much.
It's a decent house. There's no doubt about that. But a $600,000 house and you're not paying taxes on it, hey,
Let's do this.
that adds up. Do 30
quick,
years
yeah.
and saving $600,000, $13,000 a year times 20 or 30 years. Yeah, well, that money starts to add up.
Absolutely. One of the other programs that's in Illinois too is the Illinois Mortgage Financing Assistance, and it's called First Home Illinois, and so it's available to veterans, and it's they will give you a grant of $7,500 toward a down payment on a 30-year fixed rate mortgage with a competitive interest rate. So it's only available for first-time home buyers and veterans in select counties, Will County, for example, and Kane County, and certainly Cook. So again, it's something that, from a lender perspective, you might want to have some awareness of it.
Now keep in mind, sorry to cut you off, Nick, these are properties and homes that they must live in.
Correct.
To reap these benefits and these tax exemptions.
Yes.
Okay.
Yeah,
That's the
good
primary
point.
residence.
Because a lot of people, you can't use it for someone else, unfortunately, right?
Well,
Wow.
you guys just hit another doorbell here. Ding, ding.
Oh, you're thinking today. I love it. Look at that,
You
Rocco.
can only in a VA loan, not an FHA loan.
Wait, what?
You can carry multiple VA loans. Did you know that?
Absolutely.
But how?
It's called second tier entitlement.
You can't have 2 FHA loans. An FHA is open to the public.
Okay,
Okay.
right.
So if you own an FHA mortgage, you bought your first home, and then you want to go buy another property with low down payment, and your credit score is still a little quaky, so you want to go buy another one FHA to take advantage of the 3.5%. You can't close on the new loan while that old one is still outstanding.
Correct.
On a VA loan, you can.
Can you let us know how, though? Because it gets really complicated and it's got to be strategic, right? Because you have to occupy it because it's to provide home and
Yeah.
shelter for our veterans. So if I'm not going to be, how am I going to live in 2
That's
homes?
a legal thing.
It's not a legal thing. I can touch on it a little
Please,
bit.
thank you, Grox.
So remember that VA covers 25% of your loan.
Okay.
So they have to apply that rule to new conventional loans, which today is 453,100, something like that.
Yeah.
So if we have a borrower that has only utilized a portion of their entitlement, which the minimum entitlement is right around 36,000, whatever's left over from that, they can actually use that entitlement money to qualify for another home. I actually did a loan last year, and I was telling Trevor about this earlier. My client was relocating. You know, they were moving him to a different base, but he didn't want to get rid of the property that he currently owned. They wanted to rent it out. Kind of threw me for a curveball, but we started doing a little research, and sure enough, he had enough money left over in his entitlement money that would allow him to carry a second mortgage, so long as we did not exceed 453,100, which is the conventional loan limit on both loans. He was able to take on both loans and actually be able to qualify with obviously their debt to income ratio. So there are ways to carry two VA loans. You just have to make sure that you meet all the requirements. And the first way of verifying that is to make sure that the entitlement covers that.
Trevor, can you go into some other benefits that we don't necessarily talk about in the mortgage world too much, but like spouses and all that stuff that you might have up your sleeve?
There's one key program that exists for spouses of those service members who've been killed in action, and it's the Homeowners Assistance Program. And basically what it does, and from a policy perspective, it makes sense. So if you live in Oklahoma, but you're from Chicago, and your spouse dies on active duty or in the National Guard or with the reserves, you're essentially allowed to relocate and recoup the costs of that relocation to come back to your home of record. So a unique program that was really made popular right after the crash, when anybody who, and I myself was included on this, was in a distressed property because of the crash, and you had orders to move, which I did, you were able to recover 90% of the difference between what you bought it at and what you sold it at. And for me, that was a significant amount of money.
Wow.
Oh, wow.
So, that still exists. The other program too is it's a law that you need to be, I think, familiar with, and it's the service member.
So let's go back to that, though. Can you share a little bit about that story?
Yeah. So my wife and I entered active duty in 2006, and my wife and I moved down to Florida. So we grew up in Chicago, and the only reason we moved down there was to be part of the active duty Air Force. Mm-hmm. And I was part of the Judge Advocate General Corps, and I still am. So we moved down there, and I think we bought our property for like $214,000. We had to move. We got orders to move in 2008, and the property was worth about $80,000 at that time.
Because that was Florida.
And the county that we lived in was, I think, the hardest hit, or one of the hardest hit in the country.
Dade?
Pardon me?
Dade?
Brevard.
Okay.
So right by Orlando.
Okay.
So we rented it out for a year, and but for the recovery funds being applied to the homeowners assistance program, we would have probably been bankrupt. And basically what it was is, the government subsidized your difference between what you're able to sell it at and what you purchase it for.
Wow.
Oh, that's awesome.
So yeah, it was a lifesaver, a literal lifesaver, because we would have been stuck.
Right.
Wow.
And you're working for the government, right? So it only makes
Correct.
sense. There's some companies that do subsidize those kind of losses as well when you're doing relocation and you need to relocate someone somewhere else, and they pay the difference of what it sells for versus what they owe on that mortgage. So they're able to subsidize that. And in essence, you're working for the government. You're serving us. And so that's why that's a really great benefit.
Can we go back to the widow thing? Or if you're a widow, we touched it, but I wanted to ask another question. We kind of jumped ahead. And there's so many benefits. Actually, I'm learning a lot of stuff that we didn't know we've done the show, the VA stuff, several times over the last few years. A lot of great information that we just didn't know about.
That's because Trevor's in the house.
It is because Trevor's in the house. Anytime you need a question, bring an attorney that knows exactly what to do, a former vet. And don't forget, we got the Nitro question coming up soon.
All right.
You got to answer that.
All right.
So, widows or widowers, you have these benefits if your spouse died in service. Do those benefits, like let's say he's not in service, he comes home and then he dies post-service, those benefits are still there?
They're a little less, so they may not be fully. Typically, if a spouse passes away on active duty, the federal government's going to pay a $100,000 gratuity, and typically most members have the service members. It's SGLI. It's the acronym is escaping me, but it's basically insurance. Mm-hmm. Illinois has a similar program for its government workers, and so a spouse would be entitled to close to $800,000 or $900,000 upon that person's death, with a number of rights to burial, a number of they're Gold Star families, and so
Sure.
they're held up to, I think, a pretty high regard. So the benefits do vary depending on what status that member was in. I'm doing some estate work right now where it's a veteran, and I'm still kind of investigating whether or not he qualifies for any of those programs.
What happens if he or she marries?
Then you lose your
After the
benefits.
passing?
Yeah, she the vet passed away in service. The widow is
Sure.
It's in a lifetime.
is hanging out for about 5 or 6 years. Meet somebody new. Life happens.
Yeah, absolutely.
And then they marry someone else.
I think there's some concern that I think from a health insurance perspective that may make a difference. But I would look at that unique situation individually, and I would not want to make any assumptions at that point what they would be able to entitle to.
Does not want to go on record.
Mortgage-wise, do they still have the benefits of the mortgage?
So spouses do have benefits, the same benefits that the serving veteran has. So if you're a married couple, the wife can actually receive that same benefit. This is primarily one of the reasons why veterans sometimes get married before going off to active duty, to make sure that their family and significant other reap these benefits. So keep that in mind, that spouses do receive VA loan benefits as well.
But he said, like, if the widow, right, remarries, do they lose the benefit?
That's a tough one. I don't know.
Could they apply for a new VA mortgage?
I think the mortgage stuff's out the window if they
I
remarry.
think so.
Yeah,
Yeah.
I'm almost positive
That's what I thought
mortgage.
too.
The mortgage stuff is gone. But I can't speak for the. I was asking you for the other stuff because honestly I wasn't sure about that.
A great resource is the Illinois Attorney General's website. They've got a page devoted for veterans, and there's a 200-page manual on every single benefit that's eligible to veterans and their spouses, to include state and federal opportunities.
All right, one question I do have, if you could touch on, and correct me if I'm saying it wrong, is it SICRA?
SICRA.
SICRA. If you can.
So
Tell
that's
us what that's all
it's
about.
the Service Members Civil Relief Act, and it was enacted in 2003, and it amended the Soldiers and Sailors Civil Relief Act, and it's a federal law that provides protection for military members as they enter active duty, and that includes National Guardsmen and reservists who go on Title 10 orders. And Title 10 orders is basically just a funding mechanism by which they're paid. So it covers issues like rental agreements, security deposits, rent, evictions, installment contracts, credit card interest rates, mortgage interest rates, foreclosures, civil judicial proceedings, automobile leases, life insurance, health insurance, and income tax payments. So it's a whole ton
Like
of
a
benefits.
blanket.
Everything.
Yeah.
Everything.
That's cool.
Okay.
So we do have one question here. I thought it was a cool question. It says, what if the appraisal says that repairs are necessary? So just like an FHA loan program, you do have that component of an inspection when the appraisal is being conducted. So Graco, what happens if the if the appraisal calls for repairs?
Repairs got to get done.
What are some of the repairs though that are they're going to be calling out?
It's a lot like
I mean,
FHA.
it could be,
There's
it could
no-
be
it's not-
something as
it's
small
like
as an
FHA.
They
hour.
are not lenient on that
Yeah.
because it's for the protection of the vet.
Mm-hmm.
They're not gonna curve that and
Right.
give
So for example, FHA, you have like chipping paint,
No chip
right?
paint is allowed.
Hanging
Chipping,
loose wires,
GFIs.
GFIs.
all that good stuff.
Fridge and stove have to be operating and functioning. I mean, there's
Running water.
a lot of stuff that you can't do on a conventional loan. You can do it. This is the only place where conventional loans are more lenient than VA loans.
And then also, can I use a co-signer? I mean, if you stay within the loan limits and there's the debt to income ratios, I mean, you still have to qualify for the loan, right?
You can use a cosigner.
You can use a
can use
co-signer,
cosigner.
even though that co-signer doesn't, obviously it's not a veteran. And
Correct.
I don't
Yeah,
know.
the cosigner doesn't have to be a veteran.
okay, so
Is that
it's
what it
just
is?
income. Income. Okay, we got this. All right, you're going on record for that information. If it's not true,
I think
On
he's
record.
right.
You know
I'm
it's
pretty
Graco.
sure he's right. I've never. I don't know. For some weird reason, I've never had to do 2 borrowers on a veteran loan.
I did one last
Did you?
quarter. we
I
did
haven't.
one.
I've always gotten 1 borrower. And oftentimes,
So
a
let's get to
housewife
this
would-
nitro question because we're running low
Yeah,
on
man.
time.
It's the nitro question. You got to,
get
Stuart
Trevor.
Title is
All right.
waiting
All right.
for the answer.
So,
the craziest
if-
thing that you can tell us about your service or story.
One of the coolest things, craziest / coolest things.
Cool.
So if you ever get the opportunity to fly on a military plane, take it, because it's maybe the worst way to travel, but the best way to travel too. So
It's gonna be insane.
it's amazing. It's absolutely amazing. And
I want to do that.
I want to do that.
Wait,
So-
how do we get on that?
So what's great, one of the things that's great about it is that, as you fly with certain crews, you become friendly with them, and they'll say, hey, do you want to come in the cockpit for the takeoff or the landing? And yeah, of course I'm not going to pass that up.
Yeah,
But
yeah.
That's the coolest thing in the world. So I had flown with the crew for a couple flights, and when you fly, they give you a headset, so you can hear all the air traffic control and everything that's going on. It's amazing. So on the very last flight with this crew, I said, one of the pilots said, I got to find you a headset. And I said, don't worry about it. It's fine. It's cool. So we can see the runway, but all of a sudden the plane goes out toward a body of water. And it was, they kept kind of zigzagging back and forth. And one of the other, it was a paralegal at the time, had the headphones on. And so I just didn't think a whole lot of it because the pilots were they were like, yeah, we're just flying the plane. So I come to find out after they land, the landing was a little rougher, but it didn't really make that much of a difference. So the plane lands and the paralegal turns to me and he goes, "Did you hear any of that?" And I said,
"Oh gosh." I
said, "No, I didn't hear a word." He said, "Yeah, the pilots, they couldn't figure out how to control the rudder. And so they had to go out over the ocean or the lake rather to figure out what to do." And so from somebody who's just sitting in a cockpit,
you had no idea what was going on. You would have the whole thing.
I would have died.
And thank God I didn't have the headphones on because it would have been
you would have had a heart attack.
I'm a lawyer, I can help you. I mean, what am I going to do except be extra baggage for those guys? So that was one of the coolest things, was to be able to see those guys react in time and use their training that they had just gone over and over and over again to respond like it was nothing, like it was no big deal.
You got Captain Sullied?
Yeah, I mean,
almost, kind of. Like he had to hit the water.
Yeah.
You were almost going to go in the water. I mean, you almost got Captain. Oh wow,
the
man.
coolest thing.
Cool. I don't know if I want to do it though. I changed my
So
mind.
you had no idea you were flirting with death. You're just like, yeah.
That would be me.
This is awesome.
But you
And the
feel
pilots never
anything?
said it was a weird landing because it was going back and forth kind of.
Shut up.
But you're
Come on,
but
you
saying-
didn't know anything?
But you're pretty much saying like he was cool as ice.
And they never said a word after.
That's why we have the greatest military in the world.
That's right. That's
What
awesome.
aircraft was that?
It was a refueler.
Okay.
So it was one of those.
Greco acts like he knows, dude.
Yeah,
He
like
takes his
knows.
No,
Halloween.
he said multiple people were in the craft with him.
He takes his Halloween
Come
costume
on.
role.
Right.
to
He
the
knows
next
about it.
level.
Bro,
Like,
you were not Maverick
He
or
knows
Goose.
about it.
All
Like,
right?
can you give it up? You're not.
He's cougar,
This is
by the
like
way.
the real deal. Like the real deal. Great stuff. Thank you so much for coming
Thank
on
you.
and hanging out with us. Seriously, this was a great show, and I hope that you found it, interesting, educational. I mean, lots of good stuff. And of course, where can we get a hold of you if someone wants to have, has more
I got a lot more questions, so I'm going to call myself.
Please don't
up
accept
the
any
phone.
calls from Nick. He's
Yeah.
really annoying.
No, absolutely.
On the show and after the show.
Please give me a call. My direct line is area code 630-430-8313, and I'm available at Trevor@OrsingerLawGroup.com.
And of course, you can always email us at info@marketoverdrive.com if you want to get a hold of any of our guests. And for all the fans of Graco Funes, you can also just, email us or email Graco directly.
Don't email me for Graco. It's the last thing I want to deal with.
Please email me for Graco. That'd be so much fun.
You know who else you can email and call? It is these sponsors that pay the bill. Let's get
Wait,
into it.
I do want to do a shout out for Carmen because she's the one who introduced us to Trevor, and she's brought us some amazing guests. And thank you so much
She was
to
at the top of the list.
Carmen.
Michael Randick and Carmen Carbonaro of Stewart Title.
Do that.
They were at the top of the list. Tamika Scott with Money Matters Financial Peace. Denise Edenhofer with Fidelity National Home Warranty. Joanna Diaz with Credit RX, who was just here last week. Great show with that one. Lisa Husino with Allstate Insurance, who was here a few weeks back. I want to thank Trevor again for coming here. Thank you for your service. Thank you for your time today as well. Is there a problem? Can I sign out? What are you waving lights for, all right?
Oh, wait, we just want to thank everybody for following us and making sure that they do follow us on YouTube, Instagram. Give them our social media. Seriously, you forgot to do that anymore.
I'm done. I was
Once
getting
you
there.
give these sponsors, you're like, I'm done. You quit.
And thank you for watching today.
That's what
and
happens
we'll
when
see you
I don't
next
pay the
week.
bills. Nick, just please, Graco, can you please tell our listeners where can they find us?
You can find us on all social media outlets: YouTube, Facebook, Instagram, Twitter, KarlaMina.com, WGN. Thank you for watching, everybody. We'll see you next week.
Thank you for hanging out with us. And next